Let's talk about Nvidia earnings, stock symbol NVDA. They beat on earnings. They beat on revenue. Pretty good earnings report. $39 billion of revenue. That's insane. That's like 8 times more than what they got just 5 years ago. However, it didn't have a huge impact on the market as a whole. It was really a dud if we're really looking at it from a price action standpoint. So in this video, what I want to do is I want to outline what I'm seeing on the Nvidia chart here going forward, the key levels to be aware of, because tomorrow it could fade the earnings or it could, rally really strong. The one thing we didn't get was a massive earnings pop like what we've seen in the past. Now, last earnings, we only got a 0.5% move. But even with that in mind, the options market, when you were pricing in the cost of a straddle, they were pricing in a 16% move from earnings. That would be like Nvidia moving like a $500 billion in value post earnings. There just wasn't a world where that could have happened. I just did not see that happening whatsoever. But yet people were paying that kind of money for the options. It was always going to be a dud for them. So, like I said, what I want to do is I want to outline the key levels here. I want to talk about how it looks with the overall market and where it may go as well going forward. Let's go ahead and take a look at these charts here. So like the rest of the market, it's been stuck in a sideways range going all the way back to really October, a little bit longer than the broader market where the S&P's been trapped since November. This stock has gone nowhere, and it's been testing the 200-day moving average on a regular basis going back to late January. And it tested it yesterday, held it, bounced today. But now let's go ahead and throw the earnings action on and see what we're dealing with here. Post-market, not a real big change. You had a couple of swings in both directions initially, but nothing to really get excited about. I mean, it's slightly higher, but nothing more. Now, that could change overnight into the pre-market tomorrow, and the stock starts to rally. But these are the levels that you want to be aware of here. The first one, you have a declining trend line that goes back to the January highs. This declining trend line should play a key role in your technical analysis going forward, because it really doesn't get bullish until it can break through this level. And where does it break through that level at? Well, if it was to go on a pretty significant run tomorrow, it would need to break above 141. That doesn't look like it's going to happen in the here and now, but tomorrow could be a little bit different. There's also another couple of things that you want to watch out for. If it does break through this resistance level, then you have some longer term resistance that has already formed, that's been tested and has rejected price on a repeated basis, starting with the test in November, again later that month. Then you had it again in early January. So if we do break through this 140, 141 mark and we start to go on a pretty good run, then you're going to want to watch this resistance overhead at about 156. If you get up to that level and you start seeing it decline, that would be a good reason to go ahead and get out of your position. So we got the two resistance levels overhead marked out. This one here is the most important at this particular moment. It's rejected price on 3 separate occasions. Now, let's draw some support underneath and see what we're dealing with there. This level of support going all the way back to April of last year, when you had that significant sell-off in April of 2024, this is where we bottomed out at. And then we tested again in August when we had that huge sell-off on the S&P where like futures were down some 200 points in the pre-market. Yeah, that level has been a critical level across so many stocks since then. So you have critical events here that's taken place, big significant market lows. And then again here in late January, it tested, early February, tested it and held it as well. So if we do get a fade, you want to first see how we handle the 200-day moving average. It's gotten a little bit sloppy of late, so I don't put a lot of weighting on the 200-day moving average like I do on some of the other stocks, just because the stock itself is not respecting the level that much. But if it gets back down to this 119 level, there could be a bounce right there. So essentially what you have is a narrowing range. Nvidia has the rising support here, it has declining resistance here, and that level is getting tighter and tighter. So if it's the longer it stays in there, the tighter that range is going to get, and eventually there's going to be an explosive move one way or the other. If it breaks to the downside, where you want to really start to get nervous at is the fact that there's not a lot of support underneath. I really cannot find a lot of support for the stock outside of this green line right here, and that's a trend line that goes all the way back to April of 2023. And then you have a little bit of a price level support right here. So if this purple line fails, this short term, or I wouldn't call it short term, it's like goes back to April last year, almost long term. If that level fails, I think that's the most critical support level right now. Then you hope and pray that this level right here can somehow manage to hold. It's been tested on a number of occasions, both as support and both as resistance. But then, yeah, that 103 level becomes critical, because then after that, maybe these previous lows from April, if it gets down to that level, holds, but then that's going to be pretty much in conjunction with this rise in trend line right here. So there's not a ton of support once you get through these two levels. To the upside, I think it's a little bit of a murky terrain trying to break through this resistance here, only to have to deal with this resistance at 156 later on. Now, the one thing going in its favor is has a slight ascending slope, so that could, be 160, 170 before it ever gets to that level. But for now, this declining resistance should be your sole focus. Now on SPY, this really is probably one of the best things that could have happened for the bears, because SPY coming into the day had been down 4 straight days, and at one point it was looking like it was going to make it a 5th straight day, but a decent pop into the close changed that narrative. Still trading below the 5-day moving average. You'll probably get a little bit of a pop out of this tomorrow if Nvidia can hold its gains. If that's the case, it starts to create that dead cat bounce narrative, to where if you would have seen like a 2% gap higher, okay, then we're starting to get up into like the 606 range, to where maybe that dead cat bounces a little bit more, but then you have resistance overhead right here, which makes it a little bit difficult to go chasing after. So I really think this is probably the best case scenario for the bears, because if Nvidia would have just crashed and burned after the earnings report came out, there would be really no opportunity to get short on the market. And then right now, okay, we open up like 15, 20 points higher tomorrow. Is anybody really going to put a lot of faith in that from a long perspective? I'm not. Bottom line, I don't think that this earnings report from Nvidia did anything to really change the negative tone of the market over the past week or so. We're still in this nasty, nasty, choppy environment. It's frustrating. I get it. I haven't been able to trade as much as I would have liked, because there really hasn't been a really good direction. If the market opens higher and you start to see that fade into tomorrow, that could be a good opportunity to try to fade this market. I don't have any short positions at this point in time, but if that happened, I would probably be looking to start getting short again. If you enjoyed this video, I would encourage you to like and subscribe, and let me know down in the comments below, what was your thoughts on the Nvidia earnings? Was it the way you were hoping? How were you positioned going into earnings, and how did that turn out? I'd love to hear from you guys. I like to be active with you guys in the comments, so let me know what you think. Thank you guys, and God bless.